Can you hear me now? Good. All right. Okay, so we have a few more minutes left. I want to spend some time on some properties that Phil sent me. Phil, you there? Phil? Phil? Okay, so hopefully Phil will jump back in and we can look at those. Um, any questions before we get to Phil? Anybody working on something or something they wanted to ask? It can be in reference to what we were talking about, and I'll answer it the best I can. Again, not being a lawyer, but thank you for the session. We want more. Okay, good. Next week, it's going to be someone to talk to us about mortgages. So definitely be able to answer some questions when we talk about mortgages, and specifically we can talk about the mortgage rule changes with the government program they're talking about implementing. I believe it's kicked off, and the ability to get the government to have an equity position in your property. So that's interesting. We're going to look at that. How long does it typically take to set up the pyramid structure holding? Oh, that's Frank. That's done like days. I mean, to set up the corporation, if it's a number corporation, I mean, it can be done in a day. I mean, the registration and stuff. A few days you could have that set up, no problem. Shouldn't be a problem to have set that up in a few days. Depending on the law firm, I guess, is the better answer. Yeah, it's very easy, Frank. Very easy. At least the request is easy. That's what we do. We request. Okay, so Phil, my friend, are you there, my friend? So we can look at these properties. Keep asking questions. I'm going to try to get a hold of Phil. I think maybe he dropped off somewhere. I don't know what happened. Can you do a session on financial education? What specifically do you mean, Nick? And I'd be happy to do it if you gave me some areas that you want to talk about. If you find a property, you may not have the time to incorporate, so beneficial to do it ahead of time. Yes. I mean, if you want it under the corp, then you assign it to the corp before the purchase is what you can do. That's one way of doing it. If you purchase the property and you transfer it, you can do that. And Ed talked about the different impact of that, and that's where you'd want to participate with an accountant. Typically you'd want the corporation, but again, it can be set up quickly, and that's Frank's question was how quickly it can be set up. Very fast, Tammy. So in the process of setting it up, and again, you'd want to talk to your particular lawyer and ask them about the length of time it would take to set up and why you're asking, and you talk to them. And during the process of the purchase of the property and the due diligence, before you take actual possession of the property, that would be something that if you wanted that in the corporation, you could assign it, and that's where the assignment clause would be important to us for sure. Does that answer your question, Tammy? Good. Frank, that's a great question, and that's really a preference thing. I mean, and depending where you're investing, you could put, $1 million. I know people that are $1 million. I know people that do separate for each one. It's totally up to you. At the end of the day, it's an insurance policy between assets, and I think that's the advantage. If you want to put $1 million worth of liability, like assets, value-wise, in there. You could still do things to protect that million, obviously. It's when you start building up equity and actual value in that company that it becomes exposed, right? What you have in there is exposed, and that's sort of what you're talking about with the borrowing the money might be able to help you out there, would help you out. Again, that'd be something an accountant or lawyer would do it. But really, Frank, it's a preference thing. How much money do you want, or how much value you want in that particular one? Charles, that's really all over the place. You're going to pay a little bit more. This is what I'll say, Charles. You're going to pay for a property, that's a investment property, business property, more specifically commercial. Typically, you're going to pay more, Charles, for that. You're going to pay a higher interest rate and maybe a different amortization. It might be 15, 10, 15, or even 20 versus 25 or 30 versus the residential. So again, that'd be something you want to talk to your mortgage broker about. But definitely, there's a difference, Charles. Almost always, you're going to see a difference between those. Yeah, right. Exactly. Exactly. So again, lenders do what they want to do, right? So it's really about what risk they want to take and how much they want to expose and how they want to be exposed. So I mean, the rules, on amortization and you know, the interest rate stuff. There's they can do whatever they want, pretty much. They can do whatever they want as long as it doesn't. I believe the current legislation says 60% interest rate per year is the maximum you could charge. Um, uh, don't quote me on that. It might be 60 is loan sharking, but it's in that range. So there's a lot of flexibility for the lender. The amortization, when someone gives those loans out, typically there's somebody insuring the loan, and the insurer is the one that kind of says, look, I don't want to, we won't insure loans that are for businesses more than 15 years. It's really up to them and the insurance companies that are insuring these loans, what their rules and regulations are. That's really a limit or restriction, unless the lender wants to take that risk on themselves, which typically you're not going to see in the industry very often, I would assume. That makes sense, Charles? So the best thing always to do is whoever you're doing business with or potentially doing business with, ask the question. Say, look, what's the current rate? This is what I want to do. These are the kind of things I want to do. What's going to be the impact? What lenders, am I are available to me? Remember, lenders want to lend money and mortgage brokers want to get you the money. That's how they get paid. So there's a lot of motivation for them to get you the money. It's just about you understanding what they want from you and what requirements they have for you to fulfill them so you can get the loan. Okay, who wants to lend me 70 for a mortgage on my country store so I can renovate the floor and the roof before opening? Again, if you're asking for the money, Charles, then, again, that would be a question of the liability that the lender is giving you, right? So if I'm a private lender and I want to lend you $70,000, yeah, 8%, then we're talking about how long would it take you to pay back the loan? And, are we talking 5 years, 10 years? Is it amortized? Those questions, you'd want to know. And obviously the person, I would assume the person would want to lien on the property themselves. I know I would. And I would want to know that I was not exceeding, at 8%, I would not exceed 80% loan to value. Does that make sense, Charles? Yeah. So if you got something, Charles, you want to put it together. Next Tuesday, you can present it to the group. But it's gonna, definitely gonna want the question of, loan to value. So let's just look at an example. So if I had 100K value, okay, and let's say someone had a 50K mortgage on it, and they said they want 30K mortgage, 30K loan, so hard money loan, or call it private loan, hard money loan, hard loan at say 8%. I'd be okay with this, okay? But if they asked me for 50,000, right? If they said 50K at 8%, I'd say no. Why? because 50K puts you at 100% loan to value. Does that make sense? Okay. All right. No, Frank, does it make sense? No worries, my friend. Look, it's okay. No worries, no worries. Look, definitely want you to understand this. Look, if somebody had a property and it was valued, this is the value, okay? 100K. That's value, okay? And they have a mortgage of 50K. Okay, so LTV right now, right? LTV is 50%. Everybody see that? Everybody understand that? Loan to value right now is 50%. So they say, hey, I want to get a loan on my property. So they're basically saying register a lien on it. You're protected by the property. That's the hard asset. They're basically lending. You're lending again. So if they said to me, I say, okay, well, how much do you want? They said, well, I want 30K, and I'll pay you 8%. I would be between 8 and 10% as long as the LTV 30 plus 50 equals 80% or less. Does that make sense? But if they ask me for 40K, I'd say, oh, no, you'd have to pay me, say, 14 to 18. If they ask me for 50K, I'd say, oh, you got to pay me 18 to 24. You see that? Because if you take it, because if something changes, like if the market changes, because the loan to value here is 90 and here 100, you're in second position on this loan. You're exposed. There's a reason that the banks like to work with 80%, right? It gives them a nice 20% cushion when they do refinances or they do investment property, stuff like that. They're taking a 20%, they take 20% risk off the table by saying, look, we'll only loan 80%. Now, some institutions will do more and, they have different rates for that, but the 80% is, the market moving 20% in any, in a short period of time is even in a 20-year period, is rare. But it happens. Obviously, it happens. But typically, that they're pretty safe. You're pretty safe at 80%. Does that make sense? Good. Okay, got about 8 minutes left. Anybody else? Any questions? Next week, I'm going to bring my mortgage broker on and talk about mortgages and insurance and how you can protect yourself, even insuring yourself through the corporations, shareholder agreements. He's excellent individual and wealth of knowledge. What if you put an offer on a property in your personal name and have it already been pre-approved for financing through the bank, then you decide to transfer it in to your corporation entity? Could the bank decline your application? Well, Tammy, yes, the bank can do whatever they want. The bank, you would definitely want the bank to know that is your intention. Transparency is always the way to go, in my view. So tell the bank that you want to put it into a corporate entity to possess the ownership of the property. Tell them that you could tell them, I'm still guaranteeing the loan, right? I'm still the one getting the loan, but the ownership of the property is in a corporation. This may create a challenge to that particular institution. You should know that ahead of time instead of being caught at the 12th hour, 11th hour, and finding out that it didn't work out, right? So just the best thing always, in my view, is to tell people straight up what you're doing. Just tell them, tell them how you're making money. Tell them, where you're making money. Tell them how, how it works, that the benefits to you. I think that we can't hide or do not want to hide the fact that we profit in our business model. I think people respect that and appreciate that, and I think people want to do business with people who are making money. Yeah, don't be sketchy. With anybody, don't hold back. I say, just be transparent. This is how I make money. This is how I do it. If I can help you, great. If I can't, that's okay too. We don't want to hold on to any one deal too tight that we make bad decisions. We just want to, do our business like we do our business and move on. Does that work, Tammy? Yeah, great. Excellent. Okay, a couple more questions. Where were the downloads today? No downloads today, Charles. No downloads. We were talking about corporations and business structures. No new downloads to give you, my friend. Okay, folks, I'm going to wrap it up. Okay, because we had Ed on tonight, I'm going to put the last 3 sessions, I believe, need to be uploaded. The rest of them are on there on YouTube. You're definitely able to go and see them. I will do the rest of them in the next day to make sure Ed's is up there because it's a great session to have Ed Nano with us. And we'll definitely get the one with the advisor next week on quickly, okay? All right, folks. My pleasure, my pleasure. If you need anything, you know how to reach me. If you're good, type in yes or Y. My pleasure. My pleasure. Okay, folks, have a great rest of the week, and let me know if you need anything, and I'll see you all next Tuesday. Thank you.